Hello everyone and welcome back to another video. God, what a nasty reaction to Facebook's earnings. Stock's down 20 something percent. Facebook's earnings and their reaction made Amazon gap down 5% as well as move the whole market. Amazon's earnings after market today are going to be very important because they're probably going to determine whether the whole market goes up or down. If Amazon misses or we see slower growth, it's probably going to end up with a 20% cut, just like Facebook and Netflix did. If we look at the weekly, let's say we cut from here to the 200 MA, that would be a 20% cut, and that would pretty much align with the miss on Netflix earnings and Facebook's earnings, as their reactions were about 20 something percent. So I wouldn't be surprised if Amazon actually goes to about 2.5k. That would be a sort of round number for people to start hopping in. Plus, it would align with these tops here, so that 200 MA would sort of start acting as support. Obviously, if Amazon does beat, just like Apple or Microsoft, we may start going up. So in terms of resistance, all of these lows are most likely going to act as resistance. So so let's say we beat, the stock would probably gap up, so it would most likely get pump over those resistances. But notable, we're looking at that gap over there. Obviously it depends on where the stock closes. We may close somewhere here, and then obviously the bigger the gap we leave, the worse it is, because normally all gaps tend to be filled. If you own the stock, obviously you don't want it to gap down, but then if you don't own the stock, you might be like, oh well, I don't own Amazon, I don't care. Well, you should, because Amazon is gonna drag down QQQ. So if Amazon cuts, the Qs are gonna drop, and that's gonna drag down everything because people are just gonna start selling. So if we look at QQQ, we have found support basically on the weekly. We're gonna be looking at those lows basically at the bottom, so 13.1. If Qs cut, then it's gonna be bad technically. So we've come down to the 50 moving average on the weekly, bounced off it, went below it, back up, kiss of death, and now we're probably gonna resume. This is very bearish. This looks really bad. We've also got a sort of head and shoulders forming. So you've got your left shoulder there. This could be the head, and then this can be the right shoulder. As long as this candle closes below this red line here, you could pretty much say it's a head and shoulders. So now we can add a downtrend right here, and we can just follow this downtrend, maybe to those lows, something like that. So 12.4, those tops down there at 12.1, and notably this 200 moving average. Because if we look back if we look historically, Qs tend to always pretty much bounce off the 200 MA. So that would be very attractive. But that's obviously, this only happens if there's like a proper crash. But for that to happen, we'd probably need to see some form of a recession or a freeze in the financial markets and stuff like that. So we're probably far away from that. Plus, these are weekly candles, so it would take quite a while. Anyway, and I meant the Nasdaq, not the Qs, even though they're pretty much the same. And then obviously, if we look at the S&P 500, so the S&P is very similar. Most people track it. If the S&P goes down, most stocks go down. If the S&P goes up, most stocks go up, and so on. 3, 2, 1. So we can see that there was a big cut. So shorts pile in, they pierce the 50, then they cover. We reject. They pile back on. SPY goes down. They cover. So how much profit did they take here? So SPY cut by about 50 points. Jesus Christ. If you're up by 50 points on the S&P, you're gonna take profits. So they cover, we hit this downtrend and a perfect rejection. We don't make it to the 50, unlike the Qs, and now we're going down. So our next resistance on SPY is good. Well, it's here right now, but I'd be looking at that 443. What's really important on the S&P is that on the monthly, we don't close under this low, which is at 420.76. So that's what I'll be looking for, but we're only on the 3rd of February, so it's gonna take a while. And then on the weekly, we can see a similar situation. So we've got pretty much a head and shoulders. Those tops are pretty much the same. If we look at the full candle closes, they do match up. So if we ignore these wicks, this is a head and shoulders. So yeah, we'd go down to the 50, pierce it slightly, come back up, shorts pile back on, and now we're probably gonna go down. Our next real support is probably 340, which is quite far away. What else have we got here? 360-ish. And then there is a gap here at 400, so we could bounce off of 400, but I wouldn't, yeah. I think if we go down, we're probably going to at least 400. Yeah, so it's just something to be mindful of. If Amazon goes down, it's gonna drag down the Nasdaq. It's gonna drag down the S&P 500. And once the indexes start falling, people just sell pretty much everything, and you see you'll probably see most of your stocks go down. So if I would just be mindful. Obviously, this might not happen. Amazon might have great earnings and beat, and we might actually go up. But it's just something to be mindful of. Going into tonight, do you want to hold your stocks? Do you want to sell some just to just raise some cash just in case we see deeper cuts? Anyway, if you like this video, hit that like button, subscribe if you want to see more content, and good luck.